Welcome to this week's episode of Your Stock Request for the 3rd of January. Hi, I'm Michael Gable, Managing Director of Fairmont Equities. Your Stock Request is a weekly video where I take your requests and analyse the share price charts for you. So this week we're looking at Ramsay Healthcare, Westpac, Corporate Travel and ELX. So if you have a request, make sure you send it through to me and make sure you share this video on social media. So starting off with Ramsay, this is a daily chart, the 1 year chart. As we can see, since the end of June, it's been tracking sideways. So it looks like it's been building a bit of a base there with some clearly defined limits, upper and lower limits. We could see at one point in October it breached that support level, but quickly recovered, and it's gone on to make a couple of higher lows, and most recently we're seeing an attempt at a breakout. So not a very decisive move yesterday, but the rush up there so far is positive. So look, if we do confirm that we get a breakout from here, then we should see Ramsay enter a new trading range. So initially you'd be looking at a trading range of the same depth as the old one. So if we measure that, stick that above there, zoom back out. So as you can see, that's going to be a fairly obvious level of resistance anyway. So yeah, if we get a breakout here, then we'll have a new range between sort of 58 and 62. So it's not a huge one, but so far it's displaying some positive signs. Okay, the next stock is Westpac. Look, I'm in two minds about the banks, whether it's time to buy or not. I'm inclined to wait a little bit longer until February. But Westpac's showing some interesting signs. This is a weekly chart actually. Let me move out to a monthly. And I'll show you what I'm seeing here. So this is the GFC low, the far left, the rally to the 2015 peak, and obviously it's pulled back. So at the moment it looks like we've got an ABC correction, so a nice three wave, and often wave A is equal to wave C. So if we measure that, we could see that the length of that is about the length of that. So for the moment we've got a neat ABC with an A equals C. The other thing is if I get the Fibonacci tool and measure the entire rally off the GFC low, what you'll notice is the three wave decline has come back to that sort of 61.8% retracement level. So again, possibly some support here. Finally, if we remove that and go back to the weekly chart. So this is showing the decline from 2017. Now what I've noticed is the RSI on the weekly basis bottomed out first quarter 2018, and it's marginally higher, but effectively there is that slight upwards trend to it, whereas of course the share price has gone from sort of $29 to $24. So that's what we call divergence. Share price heading lower while momentum heading higher. I mean, not a great deal of divergence, but it's there, and it's on the weekly chart, which is more positive than a daily chart. So we've got divergence there. If I remove this, the other thing is we've got this bullish engulfing candle, this white candle here completely engulfing the other candle there, and so far we're staying within the upper half of that candle, which is quite important. So, you know, a few signs to suggest that we will get a bounce here in Westpac, and this is the previous high from 2015, near $40. So maybe this move is over, but if you're a little bit more conservative, I think we just wait until February and the results of the Royal Commission. All right, moving on, corporate travel. Obviously, it's been trending up for a number of years. It's been a star performer from a few dollars several years ago and rallying to over $30, so a massive increase in the share price. But of course, most recently, we saw it drop on the news that a hedge fund was shorting it. But what's interesting is the fact that after dropping there, it didn't continue to see heavy selling. It actually tried to recover. It's come back a bit, but it seems to be trading in a bit of a range here. So I think that's a good sign generally that it's holding on. Not necessarily good enough that I'd be buying it. At the moment, it looks like a hold unless there's a better opportunity in the market. But for the moment, it looks like it's just going to be range bound. And until it breaks out of that range, I think the outlook's a bit neutral. And finally, ELX medical lasers. Not one I'm familiar with, so let's move to the weekly chart. So we've got this peak here in 2016, and then obviously a fairly decent drop off after that. So what I've noticed is the rally from the lows in 2018 came up to this sort of key level here, and then we could see the price rejection. So I'll zoom in a bit more. So there's the price rejection at that key level. So a bit of a negative sign, and now it's putting in the lower high. So a bit of a negative for the time being. Maybe this is a symmetrical triangle within a downtrend, which can also be quite negative. So for the moment, I'd just be quite cautious on this. Ideally, I'd like to see a breakthrough 90 cents to get bullish, but at the moment, I'm neutral to slightly bearish on the outlook of this particular one. Well, that's all for this week. If you have a request, email it to me, and make sure you share this video around.